Hello and welcome back to your South King County Real Estate Update. My name is Sarah Eggleston with Stone Egg Realty at John L. Scott, and I am back to deliver your local real estate news. We have switched over to a monthly show, so hopefully we'll still cover everything that you're interested in. If you have a specific question, please feel free to reach out. I'd love to have a conversation with you about real estate market or answer any questions you may have. So we'll go ahead and jump right on into these slides. So it is May 2023, and congratulations to the winners of the coloring contest. We have our 4 beautiful winner entries right here, and they are just awesome. So thank you to everyone who participated, and congratulations to those winners. Also, congratulations to the Kraken for making it this far in the Stanley Cup playoffs. Last night, they did not take away the win, but they have another opportunity tomorrow at 4. If they win that, they'll be playing again Monday, and the time will be determined there. So if they win tomorrow, they will play again. Otherwise, they'll be eliminated. And so for the real estate news, the Seattle area housing market kicks off spring season with a whimper. Normally spring, we start to see a real uptick in showings and pending homes, and just a lot more activity, a lot more homes coming to the market and offers being submitted. This year, it's definitely a little bit more subdued than it has been in past years. The number of pending sales in April was up about 2% from March, but down 28% from April of 2022. So we are seeing way less activity than a year ago. And median prices have been increasing since the start of the year, but they have fallen in our area since last spring. In King County, in April, the median sale price was $875,000, and that's down 12% from a year ago. So we are down significantly from where we were a year ago. But remember, last year, January, February, March, April, we had that huge uptick in activity as we saw the possibility of interest rates rising in the future. People went crazy trying to lock in a home at that interest rate. So if you were able to, awesome, good on you. If not, there may be an opportunity. We are seeing lower priced homes now than we were a year ago. So if you were dealing in bidding wars and not winning, now may be a really great time to re-enter that market. So inventory is still really tight compared to a year ago, but we are seeing more listings come to the market. We saw a lot more homes come to the market late last summer than we usually do. So those homes have kind of been snatched up. We are dealing with some very low inventory. And about 42% of homes in the Seattle area sold for more than their list price in March. So that is down from 85.5% of homes selling above list price a year earlier. But still, 42% of homes in the Seattle area are selling for more than list price. And if we look at condos compared to single family home sales, you can see there's a bit of a difference there as far as the number of closed sales. We're down in all categories, but it's a little bit more intense in Seattle for condos. In kind of the south end here, we are seeing that trend as well. It's a little bit more intense of a drop for condo sales than it was for single home sales. And for prices, we're seeing down across the board for single family homes, up 5% in Seattle, almost 15% in Southwest King, but down everywhere else. Even with those bidding wars, there are some homes that are remaining on the market longer, and it really is kind of a mixed bag. I thought this quote was a little funny. There's really no rhyme or reason to what goes quickly and what sits on the market. And there's been some homes that I thought were going to go really quickly that I saw sitting, and vice versa. So that is playing true. Fed raises key rate, but hints it may pause amid bank turmoil. So this came out on May 2nd. So the Fed did have its meeting and raised a quarter point as opposed to the half points we were seeing for a while there. But it is the 10th straight Fed rate raise that we've seen in the last year. So that is pretty significant. So the Fed may be done with that, raising those rates heading forward, but they haven't totally stood by that. they're going to keep monitoring those factors like the banks going under and the inflation data and all that. So things are not set in stone going forward, but we do expect to see the Fed stop those rate increases likely coming up here. And so the US prices stay high, showing inflation pressures persist. Prices increased 0.4% from March to April, which was significantly more than people were expecting. From February to March, it increased 0.1%. So this is a pretty big increase from that February to March jump, but it is less than we were seeing last year. Even with the price pressures rising in April, the latest data did provide some evidence of cooling. We're seeing groceries go down, hotels and airlines went down quite significantly, but apartments rose. So there's a balance of what is going up and what's going down. But overall, the increase is more than we expected to see. But there were some wins. Gasoline was not one of those. It jumped 3% just in April. But grocery prices did drop for the second straight month, so that is good to see. The Fed is paying attention to all of these factors and just not seeing the numbers that they want to stop those increases, so we'll see what happens heading forward. That brings us to our Market Stat Minute. A little different setup here since we're doing the monthly numbers. So if we're looking at year-over-year changes from 2022 to 2023, we had 36% fewer new listings in King County than we did last year. Pending sales are down almost 24%. Closed sales are down 40%. Days on market up from 8 to 22. As far as our local area breakdowns, median sales price did tick up in most areas. It looked like Kent stayed pretty flat, but did tick up in our other three areas from March to April. New listings, we have seen those tick up significantly since the beginning of the year, but we did see fewer in April than March for Auburn and Kent. Median days on market, though, pretty much all of 2020, all of 2021, we were hanging out at this 5-6 days on market for pretty much every area. January shot up to over 40 days for Kent. Somebody slammed on the brakes, and January we did not see a lot of action, but our days on market have plummeted. They plummeted since then, and we are back close to where we were heading into last year with days on market. And last time we were together, interest rates were 6.39 for a weekly average and 6.66 for our daily. And if we bring it to today, we saw rates fall to 6.35 for our weekly average. This week's decrease continues a recent sideways trends in mortgage rates, which is a welcome departure from the record increases of last year. While inflation remains elevated, its rate of growth has moderated and is expected to decelerate over the remainder of 2023. This should bode well for the trajectory of mortgage rates over the long term. And our daily interest rate today is 6.55, so down a little bit from where we were last week and up slightly from where we were yesterday. And if we look at the recent weeks here for our daily, the blue line, Mortgage News Daily, this is reported a lot more often than the other two. So there has been a lot of volatility, kind of bouncing between 6.5 and 6.75 for the last few weeks. So hopefully we see that kind of calm down as we head further into the year. And it's looking like overall we are on a downward trajectory for interest rates. This was a quote after the March Fed meeting. Given their assessment of the potential economic effects of the recent banking sector developments, the staff's projection at the time of the March meeting included a mild recession starting later this year with a recovery over the subsequent 2 years. So the Fed is expecting a bit of a recession to head our way. But what does that mean exactly? So the definition, according to the National Bureau of Economic Research, a significant decline in economic activity spread across the economy lasting more than a few months, normally visible in real GDP, real income, employment, industrial production, and wholesale retail rates. Numbers are looking like we're headed towards a recession, but during a traditional recession, the Fed will usually lower interest rates. This creates an incentive for people to spend money and stimulate the economy. It also typically leads to more affordable mortgage rates, which leads to more opportunity for home buyers. So if you are able to make a move on the housing market right now, it may be a good time because you can always refinance to a lower interest rate. You just can't refinance out of a higher price. So if prices go up throughout the year, it may become less affordable and you'll have more competition with other buyers, possibly doing a bidding war and owing more overall for the house than you would if you purchased sooner. So I'm not going to go in too deep into this. There are pros and cons of buying during a recession. Pros, there is less competition, lower prices, and lower rates, but the cons, stricter lending requirements, so it may be harder to qualify for a loan. Fewer options are available. There's a lot of lenders that have taken some loan options off the table in the last couple of years. And economic uncertainty. So if people are afraid of losing their jobs, it may not be the right time to make a move. But if you feel like you have that job security and you can, it may be a really great time to take advantage of the market. So just a quick reminder, I have some springtime freebies available, the spring buyer and seller guides. Those are awesome. The summer ones will be coming out fairly soon. But if you're thinking about making a move this year, I would love to get one of these in your hands. And the Mariner schedules as well. I still have plenty of Mariner schedules. So if you want one of those, let me know how I can get it to you. If you have any questions, please feel free to reach out. My phone number and email address are on the screen there. I would love to have a conversation with you about the real estate market, the market in your area or an area you're interested in moving to, and just start that dialogue and answer any questions you may have. So please feel free to reach out. Thank you so much for joining me. I will be back here next month, second Friday, with your monthly real estate update for South King County. And again, let me know if you have any questions, and I would be happy to have that conversation with you. Have a fantastic month, and I will see you next time.